Hello there, Investorholics and friends. Welcome to another installment in the Investing for Beginners series. As always, we're focusing on exchange traded funds, or for a better word, ETFs. And this presentation will be just taking a quick look at the fees and costs associated with buying and owning an ETF. Hang around. This is just a quick overview, just quicker than reading it and maybe more fun. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. Okay, so ETFs are generally low-cost investments. We can't avoid the management fee, unfortunately. Everyone has to pay for the service. An ETF's management fee comprises the issuer's responsible entity fee and recoverable expenses, including but not limited to custodian's fee. The accounting and auditing fees, all these type of things need to be audited. An applicable indice license fee, so depending on what the indice is or the index is, whether it's MSCI, Barclays, Bloomberg or whatever, the ETF provider will actually have to pay a fee to use that index. Registry service fees, so linked or computer share, everyone has to be on a registry, so there's unavoidable cost as well. Listing fees, so all these things are associated with fees to keep listing. It's just a catch-all at the end here, so any other recoverable expenses under the constitution of the ETF, pretty much the top 3 or 4 there, they're going to be your biggest costs anyway. So pretty much you're paying for to run the office, to run the investment. The management fee is calculated daily and deducted from the ETF's net asset value. There may be other fees and costs charged within the ETF, so it's always good to check the PDS before you invest. Let's take a quick look at costs involved really between managed funds and ETFs, just to give you guys an idea of what the difference is quickly. So in your managed fund, you have to pay a management fee, which is what we kind of just went over. You've got the buy-sell spread, so that's just a difference between the buy and the sell price. So exchange traded funds, we're looking at the management fee as well, unavoidable management fee. The bid-ask spread, so the bid-ask spread is the same as the buy-sell spread for the managed fund. Pretty much that's just the amount which the asking price exceeds the bid price. This is the difference in price between the highest price that a buyer is willing to pay for the security and the lowest price which the seller is willing to sell it for. And also with exchange traded funds, you've got your brokerage fee. Typically brokerage fees are getting lower and lower these days, so if you're looking at a low cost provider, could be looking at $10 per buy or sell. The ComSec Pocket app, I think you're looking at 50 cents or whatever per trade, so that's a low cost way to get into these type of things. If you're using one of those apps, Acorns or Raise or whatever they all are these days, there's definitely ways to keep your fees down, but typically you're looking at $10–15 a trade, so it's not too bad. I mean, if you're trading small packets of shares, the percentage of the brokerage fee is obviously higher. If you're trading buying $5–10,000 worth of $5 or $10 is a much lower percentage. But anyway, that's just a quick overview, guys. Hopefully that information was helpful. As always, thanks for watching to the end of the video. Have a good day. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon, and crack your financial sky. Thanks, guys. See you later.